Hi everyone, welcome back to my channel Market Insights by Rajesh Sharma. In a powerful move to reignite India's economic momentum, the Reserve Bank of India today announced a 50 basis point cut in the repo rate. This isn't just another rate cut, it's a game changer. A bold signal from RBI Governor Sanjay Malhotra to stimulate lending, boost growth, and uplift consumer confidence. But what does this mean for you? Your bank, your home loan, your businesses, or your travel plans. Let's break it down sector by sector in true market insight style. So, what do you understand by repo rate cut? Think of the repo rate as the engine oil of the Indian economy. It's the rate at which RBI lends money to banks. A 50 basis point cut, that's 0.50%, makes borrowing cheaper for banks. And when banks pay less interest, they pass on the benefit to us, the consumers and businesses, in the form of loans. This is how credit flow increases, spending goes up, and the economy starts revving again. If you are new to this channel, please do subscribe and like and share my videos with your friends and the investor community. So, what do we have for the banks and the financial institutions through this rate cut? Banks are the first to feel the impact. With cheaper funds from RBI, liquidity improves. They start lending more aggressively to retail and corporate borrowers. But there is a catch. Net interest margins may come under pressure. Still, for banks with strong CASA and digital infrastructure, this is an opportunity to lead the credit cycle. What is in for business and corporate sectors? For India Incorporation, this is a breath of fresh air. Lower interest rates improve working capital efficiency, especially for MSMEs and debt heavy firms. Capex intensive sectors like cement, steel, logistics, and infrastructure can now plan expansions with reduced capital costs. This move could be the spark that reignites India's investment cycle. Real estate and housing, which has been lagging behind in the past few months or years. Real estate was often sluggish. Now it is getting a massive boost. Cheaper home loans means higher affordability, especially in mid-income and affordable housing. Buyer sentiments gets a makeover. A rupees 50 lakh loan at 20 years now saves you 1,595 rupees per month, or nearly 3.83 lakhs over the loan tenure of 20 years. It's just not a rate cut. It's a home buying nudge from the RBI. So why not make the best of it? Travel, tourism, hospitality in for a big boom. EMIs down, savings up. Guess what rises next? Your travel dreams. With more disposable income, people tend to spend on leisure travel and fine dining. The MICE segment, meaning meetings, incentive, conferences, exhibitions, may now witness a revival. This rate cut indirectly rekindles the joy of economy. But what is there for the fixed deposits and savings? It's not all rosy. Savers and retirees, they take the biggest hit. Falling interest rate means lower FD returns, especially for senior citizens relying on steady income. Expect a shift to alternatives like debt mutual funds, RBI floating rate bonds, or senior citizen saving schemes. So what will happen with for the loans and the EMIs? This one's for every borrower out there. Your home loan, auto loan, personal loan, and any other form of loan. They just got cheaper. A rupees 25 lakh loan over 15 years now saves 794 rupees per month. That's over 1.4 lakh across the loan tenure. This isn't just relief, it's an EMI revolution. So, what are the macro level impacts? Zooming out to the bigger picture, the rupee may face pressure from FII outflows. The markets might cheer this move. Rate sensitive sectors like banking, real estate, and autos could rally. However, the RBI must carefully monitor inflation, credit quality, and the global monetary landscape. So, let us summarize. Banks, cheaper funds, more lending. Businesses, lower costs, more capex. Real estate, demand revival. Loans, reduced EMIs. Travel, more spending. Fixed deposits, lower returns. Overall, the markets, bullish sentiment. So, this is a 360 degrees push to get India growing again. So, how do we conclude? What does this RBI rate cut really mean? It means growth over fear, confidence over caution, and revival over recession. As an investor, borrower, or citizen, this move will ripple through your daily life. Stay alert, stay informed, and remember, in every rate cut lies a rate of opportunity. Thank you for joining. And if you have found this breakdown valuable, don't forget to like, share, and subscribe to Market Insights by Rajesh Sharma. Drop in your thoughts in the comments. How will this rate cut affect you? So, until next time, keep learning, keep investing. Thank you very much.